Okay, folks, we're going to get started in about 2 minutes. So if you can all have a seat, there's plenty of seats in the front. Those of you who are going to the back, just know that you got some seats up here, and we'll get started in 2 minutes. Okay, folks, it's 10 o'clock, almost 10 o'clock. Want to welcome you all. Good morning. It's a beautiful day out, although it's a little overcast. It was raining earlier this morning, but the trees are blossoming, the birds are singing, and of course the UPS truck is pulling up just as I am starting to talk. We are broadcasting live from New Jersey, remotely from our homes, and I want to thank you for coming to our Preparing for Recovery Loan Options and Forgiveness Strategies update. We're going to be doing these weekly, and just wanted to thank you all for joining us. So this is our slide that says that be careful. We are going to give you some information that you do need to check out with any of your professionals. We are not providing any legal advice, tax advice, accounting services, blah, 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 blah. But we are giving you information to the best of our knowledge. And you should be consulting your professional advisor and providing them with the pertinent facts relevant to your particular situation. Here's our agenda for today. So we're going to start off with the introduction, which is what I'm doing right now. Duh. We're going to be doing some updates that my partner Steve's going to talk about, some key PPP and EIDL takeaways and considerations, loan forgiveness, and some best practices. This is the group of charming people who will be speaking to you today. I'm Todd Polinack, I'm a partner with Sachs, as well as Josh Shinani, who is a partner, and Steve. All three of us will be speaking today on the topics. We are not dressed the way that you see in these pictures. Not quite sure who's wearing slippers other than me. So I'm going to give the floor over to Steve, and he's going to give us some updates on what's new and recent, right to the very second and moment. Steve, take it away.
Thank you, Todd. Good morning, everyone. I hope everyone is doing well, holding up as best as possible. I just wanted to provide you with updates. As we know, we had seen last week that both the PPP and the EIDL programs had run out of funding as of last week, but there's good news on the horizon. The Senate on the 21st of April approved an additional funding package that's actually part of a bigger 480 some odd billion dollar package, but there are 370 billion of those funds specifically earmarked for small businesses. 310 billion of that for the Paycheck Protection Program, and 60 billion of that for EIDL. And that those amounts, we'll see. The House is expected to vote today. It may even occur while we are doing this webcast, and talk about up to the minute information. If that does happen, we will let you know. But in any event, there are specific funds within this 310 billion and 60 billion dollar amounts that are earmarked for smaller, even smaller banks and businesses. And in particular, the EIDL program has the $10,000 advance of the 60 billion reference there. 10 billion, at least as of the Senate's bill, is specifically earmarked for that $10,000 advance program. But one thing to keep in mind, the certification and other eligibility requirements. If you've seen on the news, some of the larger companies out there are essentially returning the funds that they received, not saying they did anything wrong, but Secretary Mnuchin, along with Donald Trump, said this was, these funds were more, were supposed to be allotted towards the smaller businesses. So if you look in the handout section, you'll see a clip that we have posted related to exactly what Secretary Mnuchin said about these requirements, and in particular the eligibility and certification requirements. So after we're done with this webcast, if you want to take a listen to that, click on it. It's fairly interesting and should give us somewhat of a pathway forward as to exactly how these funds will be expended. So moving on to the next slide, I'm going to turn it over to my partner Josh, and he's going to go over some key PPP and EIDL takeaways and considerations. Josh?
Hey, thanks, Steve. Good morning, everybody. So with the news, as Steve just mentioned, about more money potentially being available to everybody, we wanted to take a minute for those maybe joining us for the first time, who have either not applied or, just not aware of the programs. We wanted to take just a couple minutes to kind of recap the programs and see what opportunities are out there for everybody. So again, just some general takeaways and considerations. Applicants are eligible to apply for both loans, the EIDL loan and the PPP loan. If you listened to the webinar last week, you would have heard Steve talk about some additional funding in terms of the Main Street Lending Program. If you're looking for more information on that, we do have information available on our website. But if you do apply for either the EIDL or the PPP loan, it does not preclude you from also applying for loans under the Main Street program. And also, too, these loans that we're going to discuss, the EIDL and the PPP, there are certain interactions with other deferrals, credits, and incentives. As you know, this is only a small portion of what's in the CARES Act. There are a lot of questions surrounding, if I do receive PPP funds, am I still eligible to defer my employer portion of FICA during that period? To our understanding, the answer is yes. However, once the loan is forgiven, you are required to start paying again your employer portion of the FICA tax. But again, it's very important, and Todd said it at the outset, is that you need to talk with your advisors, your accountant, your payroll company, your bank, to make sure that all of the pieces are jiving correctly. Because if you make one wrong decision here, it could potentially derail the whole plan. So it is important to really understand all aspects of what you have here. Okay, so now let's kind of change course a little bit and talk about the EIDL loan. So the EIDL loan, the Economic Injury Disaster Loan, could provide for a $2 million maximum loan. And again, this is at the SBA's discretion. Prior, at the conclusion of the first round, because so many people had been applying for the grant, they actually limited the $10,000 advance up to $1,000 per employees, up to 10 employees. So if you were a business and you wanted this upfront advance grant, and you only had 4 employees, you would only receive $4,000, even though you were hoping for the $10,000. So we don't know if that's going to change when the new funding comes, but that is certainly something to keep in the back of your mind. There are certain net worth and taxable income limitations associated with the EIDL loan. If you have greater than a $15 million tangible net worth and you have earned greater than $5 million of net income for the previous 2 years, you would not be allowed to apply for that loan. It is a very detailed application process that does go directly through the SBA. For those of you who have applied for the loan, you know what we're talking about. For those of you who haven't, you're required to provide substantial amount of financial information, current financial information. There are also certain collateral and personal guarantee aspects to these loans that are not required for the PPP loans. There is no forgiveness aspect to the EIDL loan, and it's a 30-year amortization on the note, and it's payable at 2.75% for not-for-profits and 3.75% for for-profits. Okay, let's kind of rehash the Paycheck Protection Program loan, the PPP. It's a $10 million maximum loan balance, and it is based on formula. There is a forgiveness aspect to this loan for some or potentially all of the debt. There have been payroll cost clarifications that have come over the last several weeks. Most notably is the $100,000 cap is just on wages plus your non-cash benefits. And you are able to include self-employment income for general active partners. Other things is that individual partners in partnerships may not submit separate PPP applications. So if you've claimed self-employment income through the business, you're not eligible to apply personally. One of the other big clarifications that did come out is that borrowers may use either payroll from calendar year 2019 or trailing 12 months. If you remember back to some of the earlier webinars, the way the law was originally written was that the payroll cost computation was on a trailing 12 months, but now they allow the borrower to use either. So again, best practice is to calculate it both ways and see what provides the better benefit to the company. There are differences between use of funds and funds eligible for forgiveness. Todd is going to touch on that when he talks about forgiveness in a few minutes. The application process is completed through SBA designated banks. For all of you who have not applied yet, please make sure that you do contact the bank for which you have your business accounts with, and make sure that they are participating. And if they're not, you find out who is. I did hear through the grapevine yesterday that Amex is now participating, so you may be able to apply through them if you've not had any luck currently with your existing bank. The amortization on the PPP loan is 2 years. It's payable at a 1% interest rate. And we have gotten some questions from folks who have received their loan agreement. But the question is it says that the interest begins accruing at the day that the loan is funded. That is correct. However, you do not have to start paying any of it until 6 months from the date of funding. And if the loan is ultimately forgiven, then the interest is forgiven as well. Okay. So we talk about clarification. The last clarification that did come out from the SBA over a week ago was focused on the self-employed individuals, specifically those who file a Schedule C profit or loss. We have had some questions from clients regarding the application process for these, and banks having issues with processing these applications because it is a little bit different. In many cases, these folks do not have payroll, but if they do, the process would follow the same way as with the regular businesses. But if not, it's based upon our net profitability for 2019, and the person applying would provide a copy of their 2019 Schedule C along with the application. And just a quick item of note is owner compensation on these Schedule C loans is limited to 8 weeks of profit for 2019. And similar to documentation that you would submit if you were a regular business, that you would, if you're a true Schedule C with no employees, you would provide a copy of that Schedule C. If you have payroll, you would provide the same payroll reports. And that's pretty much how it does work. So I do encourage the people who do file Schedule C to get in touch with their bankers and make sure that those applications go through correctly. So now we're going to turn it back over to Todd, who's going to take you through again the mechanics of loan forgiveness. I will say there is still a significant amount of information that still needs to be clarified, and we're going to talk about some of those points when Todd is finished speaking. But at this point, I'm going to turn it over to Todd.
Thank you, Josh. So now we get to the really sexy part of this. A lot of people have applied or their applications are in for the next round, which we know we're very confident it's going to either be signed either today or by tomorrow. So everyone is talking about no longer applying. They're talking about how do they get the PPP loan forgiven. So at the onset, let me tell you that the SBA clarification of forgiveness is expected via additional guidance. What that means, folks, is we will be doing these webinars, updating them because the SBA needs to provide some additional information. There's a lot of questions and there's a lot of stuff out on the internet that is contradictory, even to what's clear in the law. So please be careful as you're following people's guidance, because not everything that's on Google, believe it or not, is correct. So we're going to provide to you again a recap of what we know right now that's clear from the law. And then after I'm done, Josh is going to kind of tell us what's not clear, what needs to still be clarified, but at least we know right now what is clear. First, under the PPP loan forgiveness, payroll costs include compensation of employees whose principal place of residence is in the United States of America. And that includes wages, salaries, commissions, or similar compensation, payment of vacation, parental, family, medical, or sick leave, allowance for separation or dismissal is included in this number, payment of provision of employee benefits consisting of group health care coverage, including insurance premiums, retirement, payment of state and local taxes assessed on employees' compensation. And per the SBA interim final rule, not more than 25% of the loan forgiveness may be attributable to non-payroll costs. That's important to keep in mind, that there is a percentage capping the non-payroll costs of 25% of what is forgivable. Only 25% can be used for the following payments over the 8-week period following the date of the loan. Payments on interest on mortgage obligations incurred before February 15th, 2020. Rent payments on leases entered into prior to February 15th, 2020, and or utility payments under service agreements entered into prior to February 15th, 2020. And just to note, because this is a question, utilities include payments for electricity, gas, water, transportation, telephone, or internet access. So there's two parts to this calculation. The first part is to determine what your eligible forgivable amount is, but then there is a formula. Actually, there's two formulas that are applied. The first one, the loan amount eligible for forgiveness may be reduced, but not increased, by the following two-part formula. Part A, average number of full-time equivalent employees during the 8-week period beginning with the date of the origination on the loan. B, the average number at the borrower's discretion of FTE employees from February 15th, 2019 through June 30th, 2019, or January 1st, 2020 through February 29th, 2020. And the second part is the Paycheck Protection Program loan used, notice used, for eligible cost, and the formula is A divided by B multiplied by C. So that was the first application to determine if that amount is reduced. But then there's a second part of this, relates to salary decrease. The loan amount eligible for forgiveness may also be reduced by decreases in salaries and wages of any employee if the decrease occurs during the 8-week period, beginning with the date of the origination on the loan, and the decrease is in excess of 25% of the total salary or wages of the employee during the most recent full quarter during which the employee was employed prior to the commencement of the 8-week period. And note, employees who received annualized wages or salary in excess of $100,000 are excluded. Now there's exemptions from the forgiveness reductions that are available if during the period from February 15th, 2020 through April 26, 2020, there's a workforce or salary deduction that meets the criteria in the earlier slides, but the borrower restores the FTE employees to the pre-February 15th, 2020 amounts by June 30th, 2020, and or the borrower restores the reduced salaries or wages for employees to the pre-February 15th, 2020 amounts by June 30th, 2020. So let's talk about the documentation. First, when it comes to the point of documenting and then providing that documentation to the bank, here are some things that you need to consider. First, the number of FTE employees on payroll and pay rates. The number of FTE employees on payroll and pay rates. Payroll tax filings with the Internal Revenue Service. State income, payroll, and unemployment filings. Canceled checks, payment receipts, transcripts of accounts, or other documents verifying payments on covered mortgage obligations, covered lease obligations, and covered utility payments. Independent contractors and sole proprietors on the earlier slides. The next part is the certification from an authorized representative that the documentation presented is true and correct, and the amount for which the forgiveness is requested was used to retain employees or make interest payments on mortgage obligations, rent obligations, and or utility payments in force prior to February 15th, 2020. There's going to be more information, I believe, clarification on what is being certified. And then the lenders have 60 days from receipt of documentation to render a decision. Now, folks, just to say this, we've had a number of people email us and as well as call us that they would like some assistance on the calculations and the documentation of the PPP loan forgiveness once they do receive the money. And we're happy to let you know that we do. We're putting together a service that specifically addresses this component to help you. And if you're interested in that service, we are going to be providing that as an additional service. So if you're interested, it'll be on our website, but also send us an email at covid19@sacsllp.com. Now, there's a bunch of things that are open questions, and who better to answer open questions than my partner, Josh. So Josh, tell us what is not clear at this point and where we need further guidance and where people need to be careful. Josh?
Hey, thanks, Todd. So as Todd said, there is a lot of questions you have, a lot of questions we have. If we've learned anything through these first couple weeks is that there is tremendous inconsistency out there between what the SBA has put out, how it's been interpreted. Even experiencing this with many clients going through the application process, there's even tremendous inconsistencies between the banks in certain costs that people were including on applications, not including applications. So it's made this process very, very complicated. And I know people want answers because um, the money, quite frankly, hit a lot sooner than I think any of us anticipated. So, for those of you out there who received your money, I'm sure you're asking these same questions. As Todd mentioned before, if you do have additional questions, please send them through the website, and we will try to certainly update these webinars every week with those questions, and as answers become available, certainly answer those questions. So on the next two slides, we have, I think, our top 12 or 13 points to this point. So the first one is, are the costs for the 8-week period to be determined on a cash basis or an accrual basis? I'm sure for some of you, you received your money, today, maybe the payroll end date is tomorrow, and it pays employees for the previous 2 weeks. So the question might be, well, is that payroll covered? The answer could be yes. The answer, could be no. I think if you read the law and the guidance, the words are payment during this period, which, to us would indicate cash basis, but again, it hasn't been spelled out as to whether or not it is cash basis or it is accrual basis. The second question is, well, it says at least 75% of the loan proceeds shall be used for payroll costs. What happens if I spend less? If you read one article, it says the whole loan is not forgiven. If you read another article, or if you read certain guidance, it might say that a pro rata portion of the loan is forgiven. So all the law says to this point, and I think Todd said it before, is that at least 75% of the loan proceeds shall be used for payroll costs. The next question, and actually I had this question posed to me this morning: should full year bonuses and/or year-end profit sharing contributions be included in the forgiveness calculation? Clients are looking to make those contributions. They'll pay those bonuses during this time. Typically is when they pay it every year. And the question is can the money be used to fund the full, or are we just going to be eligible to receive partial, meaning 8 out of 52? It's a great question. That is definitely one that we are awaiting the answer to as well. The next question: does rent cover only costs for facilities, or do equipment rentals count as rent for forgiveness purposes? This is a great question as well. If you go back to the eligible uses, the allowable uses for the money, you're able to spend money on interest associated with all debt. However, only mortgage interest is eligible for forgiveness. So if only mortgage interest is eligible for forgiveness, is only facility rent eligible for forgiveness as well? So that's one that we're certainly waiting on. The next one: how is a full-time equivalent calculated? Is it 30 hours a week? Is it 35 hours a week? Is it 40 hours a week? Because certainly that would have a gigantic impact, in how the forgiveness calculation is calculated. The next question: how are non-COVID-19 reductions in workforce and/or salary treated for purposes of the loan forgiveness reduction? It is possible that folks have retired, who were working in the previous period, have retired, in this period, and how is that accounted for in terms of headcount and salary? Question 7 kind of speaks to what I was saying before with question number 2. Will the formula for salary reduction be pro rata adjusted? Question 8: do the exceptions for headcount and/or salary reduction allow for replacement of the terminated worker? So we've gotten many questions. If I fired, person A, but replaced them with, person B, and maybe person B, we were able to pay a little bit less than person A. Are we able to compare person A to person B, or is the formula only going to look at person A to person A? It's a really good question. Question 9, what types of, as you heard Todd mention before, transportation costs are included as eligible utility costs? Well, what is a transportation cost? We've gotten a lot of questions as to, well, does that mean I can expense gas for my trucks, for our vehicles? This is something that needs to be clarified. I think if you ask me what my interpretation is, I believe it's respective of certain municipalities have transportation related utility taxes that folks are required to pay. Also, too, there is some transportation costs sometimes incurred with respect to delivering the utility. Again, I don't know if it leans one way or the other. Question 10, for employees who were rehired by June 30th, is there a time period for which they need to be employed in order to count towards headcount salary restoration? To this point, all we know, it says that if the person is brought back by June 30th, they are included in the headcount. Nowhere does it say that this person has to be employed for a month, 2 weeks, 2 days, 1 day. I would certainly expect that to be clarified at some point. The next question. So we've heard from the beginning that the loan proceeds themselves for federal tax purposes will not count towards taxable income, but will the expenses associated with the forgiven funds give rise to the tax deduction? We have not heard anything on that. And also, we have not heard to this point whether or not the forgiven funds will be tax exempt for state tax purposes. Again, to this point, we only have clarification on the Fed. So those are kind of our pressing questions. There's a lot more out there. Again, please send them to us, and we will do our best to gather and provide answers and further guidance as it becomes available. Now that we've had the chance to digest this, for a couple weeks, we've been able to really come forward and start, putting together some best practices. So we're going to go into those in the next slide here. So one, again, stay tuned because there is additional SBA guidance on forgiveness that is anticipated. We don't know to what extent now this will be delayed if the application process, is up and running again. We're hoping, we're asking. There's a lot of webinars out there with government officials. Part of the challenge initially was there was additional guidance that continued to come out with respect to the application process, almost to the point of where the application process was already closed. So stay tuned for that. Certainly apply now. Keep the certification, aspect of it that Steve was mentioning at the outset, and I believe Todd mentioned, and the eligibility requirements in mind. As much good press as there's been surrounding the program and putting money back into small businesses, there's been a lot of bad press as well. Steve mentioned the Mnuchin clip. There's been articles out there about Shake Shack and Ruth Chris. So really just, keep an eye as to what's happening out there. Stay up to date. This information is certainly changing on a daily basis. There's a lot new information coming out in the news. And be in touch with your advisor. If it's not us, I'm sure your accountant is completely up to date, with this stuff as well. And like we said, what interpretation and expectation we have today could very well change tomorrow. And especially during this 8-week period, it's important that as information comes out, you really make those changes effective immediately, because again, I think in everybody's minds here, the goal is still to have as much of the funds forgiven as possible. The next one is really make sure that you have a diligent tracking of expended funds. If you watched the webinar last week, we had put together an Excel tracker. This is really going to help you monitor on a daily basis as to where you are in terms of spend and potential eligible forgiveness, and really help you make those management decisions. Again, we're looking at an 8-week period, so putting it off today, doesn't necessarily help you tomorrow. So again, make sure you track those expenses. And the last thing is that we did put together a PD 10-step checklist. I'm going to ask Margaret to bring that up now so we can kind of show you what we put together, and this will be available on our website. Okay, so again, this is the Paycheck Protection Program checklist. Step 1, of course, determine if you're eligible. Step 2, contact the bank. Make sure they know you want to apply. If your bank is not an SBA provider, make sure you get in contact with them or with us, and we can kind of help lead you into the right direction. Certainly complete the application. You want to make sure you gather all supporting documents required by the bank. A lot of applications I've heard have gotten delayed or pushed back because the person applying did not provide the bank with the NAICS code or the date of incorporation. So small things, again, your goal when you apply is to get it through immediately and get into the queue. Then the bank, certainly reviews the application, comes back with their agreement, hopefully, and then the proceeds are deposited into your bank account, which is where we stand today, hopefully. And then step 7, certainly, plan out the 8 weeks of cash flow. Keep an eye again on that 75% that it's used for payroll. Step 8, certainly make the qualifying payments from the PPP loan for the 8-week period. And then you want to start to, gather and prepare your documentation to substantiate the use of the proceeds, calculate your full-time equivalents, your salary changes, and really have a good feel as to where you stand. And then, as Todd mentioned before, at the end of the 8-week period, and you do provide all that documentation back, the bank does have 60 days to review how the proceeds were spent and come up with a forgiveness amount, whether it be 100% or some other percentage, and essentially what the remaining loan balance would be. So again, this is kind of our checklist. There's others, I'm sure, out there as well. We're going to post this on our website, as I mentioned before, and we're going to continue to make changes on it as well. So at this point, I want to throw it back to the team, to Steve, Todd. Guys, you guys are having a lot of conversations with your clients as well. Give the people out there as to either some of the questions that you have been able to answer, or some of the issues that we're continuing to look into.
Okay, thanks, Josh. I'll start. This is Steve. I'm a tax guy at heart. So, the ones that stick out to me are, how will they, will you get the deduction for federal purposes? There are certainly tax law and precedent out there that says it's not available, but we'll see. And how will the states treat this? And each state could treat it differently. So that's something, again, to keep focused on. Stay in touch with your advisors. But the other piece that I really like, and it's kind of a puzzle, is the whole, how do I take the employer retention credit and pass on the PPP, or am I not eligible for the PPP? I can still get the employer retention credit, and I can defer my payroll taxes to when. And there's also, benefits under the First Act, the Family First Coronavirus Response Act. So seeing how all those puzzle pieces fit together. But I think the key here is to really stay in touch with your advisors, stay up to date, and as tax professionals, that's certainly something that we can help with. Todd will again reference the service line, but I find that of particular interest. And these questions, they're all out there. A lot of people have them, and I'm assuming we're going to get guidance shortly once this next round of funding is approved. So I for one look forward to seeing how this pathway gets pushed forward. I certainly wish we weren't in these circumstances, but at least the government is acting to help out businesses across the globe. Todd?
Yeah, I just want to emphasize that the point of the loan is really to keep folks employed, and that's why there's such a strong emphasis on payroll cost. I think that it's interesting that I found that some clients and some folks did not want to apply or didn't apply because they thought they weren't eligible. I would encourage you to check to make sure that you take advantage of this. Certainly, if you need it, you should be taking advantage of it. Don't at the first blush say, well, there's no way that we qualify. Check with your professional advisor, check with the bank that you're working with. It'd be terrible if you missed out on the opportunity that would actually help your organization stay solvent, because really the point of this is to keep people employed so that we can continue moving forward. And just to note, we are going to be updating not only our resource center, but also this webinar every Thursday is the plan. We may come out sooner if that's necessary, but just know, folks, that things are changing every day, and you never know when the SBA will put out the next clear indication as to what they mean by this or that. Josh, I'm going to turn it over to you for the last slide. Take it away.
Hey, thanks, Todd. And I'll just add to, there is some chatter out there as to whether the 8 weeks will become 10 weeks, especially because of where we are in New Jersey, New York, Connecticut seems to be kind of the hub of where the most cases are. And, we're a little bit slower to getting back to work, and, our environment changing here. So, again, until that happens, until that changes, I think you still have to move forward that it's an 8-week spend, and that should be how you forecast and document. So again, there is a tremendous amount of information floating out there. Just really be careful what you read. Again, we're here to help. All your advisors are here to help. If you have any questions, please don't hesitate, send them through. Email us at covid19@sacsllp.com. We're going to do our best to gather all those questions, either get back to you directly or use that for information to come through on future seminars. Please, we certainly encourage you to visit our COVID-19 Resource Center on our website. We do have links to various resources in addition to the webinars, the slides, the slide decks that we've put together. An upcoming webinar, just want to point you to tomorrow at 12 o'clock. There are relief opportunities available for healthcare providers impacted by COVID-19. And then we'll see you right back next Thursday at 10 a.m. Again, hoping for more clarification, guidance, answers to all your questions. So we thank you very much for today. Healthy, be safe, and we will see you next week, everybody. Thank you.